This is literally the moment that Bitcoin was designed for. In today's video, I want to go through my understanding of the macro landscape. I know I'm just a shitcoin, meme coin trader for most of the time, but I want to give you my picture. Like, I've been investing in Bitcoin since 2017, and back then my naive belief was that Bitcoin was going to become the world reserve currency. In today's video, we want to go through whether that is actually setting up right now at this very moment. Right now, it looks like we're heading into a recession thanks to Trump's tariffs. The stock market has taken one of the biggest crashes in its history, yet Bitcoin is standing at $95,000. What on earth is going on? So I want to lay out the picture of what is going on in the macro landscape, and I want to explain at the end what exactly I'm doing at this very juncture, because Bitcoin is at a very critical level. It's hovering at around $94,000 at the moment that I'm recording, which is obviously a massive resistance. It was kind of where the big breakdown happened previously. So obviously reclaiming that level would be absolutely huge for Bitcoin and probably mean like the bull market is well and truly back on. So we're going to talk about whether or not that's likely in the short and medium term. But let's lay the picture, let's lay the groundwork of what's going on in the macro landscape, because obviously Bitcoin hasn't really decoupled like this in, like, it was always the dream that Bitcoin would act as a hedge, would act like digital gold in times of massive uncertainty, because in previous uncertain times in COVID and whatever, in recession, the 2022 recession, etc., obviously Bitcoin went down like 80% or massive crashes in uncertain times, and it was just like a crazy Nasdaq beta, super Nasdaq on steroids, and it did not act like a hedge whatsoever. Right now Bitcoin is kind of looking like it could be a hedge. So if you've heard of game theory, one of the game theory games is the stags game. Essentially that means that, say there's two hunters, if they both work together they can hunt a big stag, but if one of them doesn't agree to hunt the stag, the other one goes hungry and the other one goes and gets a rabbit. If they both don't hunt the stag, then they both get a rabbit. So obviously it's more beneficial if they both hunt a stag, but if one of them defects and just hunts a rabbit, then the other one goes hungry, so they either both have to defect. Essentially what has happened for the last 40 years is globalization, everyone cooperating to hunt the biggest stag, to be stags in a cooperative game. And Trump thinks that this was unfair to America. America are hunting the stag better, let's say, and not getting as much out of it or something like that. And now he wants to go to a more of a rabbit hunting game and just hunt the rabbit for himself. So that's kind of potentially what's setting up here. And basically this has caused a huge loss in trust in the American system. Basically all the foreigners, okay, obviously he's put on these huge tariffs, all the foreigners who are holding US stocks, all the foreigners who are holding US bonds, they are now dumping them like no tomorrow. They've completely lost trust in the US financial system. Let's not go into whether the tariffs were a good idea. Probably have to see in a few years. Probably not a good idea, but nevertheless potentially has some benefits for America. Okay, but what are the immediate consequences of these tariffs? Number one, for companies in America, their profits will take a hit. That's because their input costs have gone up. So if your input costs go up, unless you charge more, your profits are going to take a hit. Likely their profits are going to take a hit. So that means earnings are going to reduce over the next 6 months to a year. So the companies in the US, their earnings are going to drop, which means their valuations are going to follow, because people generally view stocks like they pay for them on a price to earnings basis. So that's kind of why the US stock market has collapsed. One of the reasons, because people are looking forward into the future, seeing, oh, they're not actually going to earn as much as we originally thought with these tariffs. So we should sell this stock because on a PE ratio, it's very expensive. To add to that, consumers are going to have to pay more for food and for, you know, all their goods from China, whatever kind of shite that American consumers buy. Then they have less discretionary income to invest in the stock market. So that's like a double whammy for the stock market. Again, people are selling off stocks, anticipating that in the future. Thirdly, globally, people are kind of thinking, okay, maybe this is the end of US exceptionalism, and everyone was overweight US equities, US index funds, and US bonds. And now people are losing trust and thinking, oh, maybe the US trade is kind of coming to an end. We should sell these bonds, we should sell these stocks. And where they're going to be putting their money to next, that's what you need to be thinking about. The exporters as well, just to add to that point, they would earn a lot of dollars from selling to US consumers, and usually with those dollars they would put them into bonds with their excess profits or into the US companies. They're going to be earning less US dollars. As a whole, China is going to be earning less US dollars, so will be less of a bid for US bonds and stocks. So all of this was essentially to say bearish US stocks, and probably a lot of that bearishness has been priced in at this point. But you know, even me personally, over the next few months, I'm not really super bullish the Nasdaq or super bullish the S&P 500. Although Trump has seen like the impact that this has had on the bond market, the volatility that this has had on the bond market has forced Trump to backtrack a couple of times. First of all, he paused the tariffs for 90 days and we saw a massive pump after that. And then more recently today, he's basically come out and trying to backtrack on everything, the whole China situation, which is bullish for everything. So we've seen the stock market kind of have a strong bounce, and we've seen crypto have a massive bounce. So for me personally, yeah, we can see that people are rotating out of the stock market. And like I said, I'm probably not super bullish the stock market, even though they're down quite a lot. But you know, we can't really trust everything that Trump says. He'll backtrack and then he'll undo that backtrack, and he'll just flip-flop relentlessly. So there's just going to be crazy uncertainty for the US stock market. And as we can see from the price of gold, this is kind of like, you know, an uncertainty hedge. Gold has just gone absolutely vertical. I've never seen anything like this. This is like the 1970s for gold, just absolutely went bonkers. Now there's speculation that the BRICS will issue a gold reserve currency, a gold-backed reserve currency that they can use between themselves. I don't think that's super likely, but if that happened, gold's going to continue ripping. For me personally, obviously, I'm much more interested in a digital version of gold, and we can already see that rotation happening. Bitcoin is starting to outperform, just very, like, it's just starting to make that move. But if we look at, like, obviously Bitcoin has been destroying the stock market, we can see the Bitcoin return in comparison to the S&P 500, in like comparisons to its volatility, has been holding up much better than the stock market. We mentioned that. But now, even Bitcoin over the past few hours, past day or so, is starting to outperform gold. And obviously gold has done so well for this up since like January, has been ripping relentlessly. It's going to top at some point, don't know when, wouldn't short it, but Bitcoin potentially is starting to get a bit of that rotation as the digital version, as a superior gold. So people are trusting the US dollar much less. People are trusting the US stock market and the US bonds much less. They're rotating into neutral worldwide assets like gold and now Bitcoin. And I think Bitcoin, you know, kind of has that double positive in the fact that now it can be seen as a safe haven, as a neutral currency, just like gold. But what it has that gold doesn't have is, if everything reverses now and Trump, like we saw, reversed all the tariffs and everything, it's still a risk on. Like, if everything goes, you know, back to bull mode, gold isn't really going to do much, but Bitcoin will. So it's like lower risk than the stock market, better upside than gold, and probably better upside than the stock market as well. So Bitcoin just looks like the best asset to be in holding right now. Let's have a look at the Bitcoin chart quickly, because I drew this. I drew these blue lines. I've showed them a few times, kind of my thought process of what's going on here in the medium term. And although I'm super bullish, like, Bitcoin's kind of the perfect asset to be holding right now, in my personal opinion. I do think we've come into a major resistance zone. So probably not the place to be opening fresh longs. Probably a better place to be taking profits on your longs and potentially even looking for a scalp short, which is what I'm doing. So I do think we do see some resistance here. I think it would be pretty surprising if Bitcoin smashes straight through 95k, 94k on its first attempt. It probably needs a bit of a pullback, and I do think once it does break 95k, it's going to go absolutely bonkers. It's going to go straight to all-time highs and break all-time highs pretty fast, because everyone is sidelined on crypto Twitter and everyone is sidelined worldwide. And, you know, Bitcoin's kind of has this perfect narrative for what's going on at this very moment, in my opinion. Bitcoin made its first higher high in a couple of months. And yeah, we're going to be looking for, on a medium-term time frame, it to make a lower high, probably maybe like, let's say 88k or something like that. I think that would be, if you got the next, I think the next dip on Bitcoin is probably a generational entry, unless, you know, unless you're of the belief that there is a massive recession and this whole thesis doesn't work out. In that case, then Bitcoin is just putting in a lower high, and yeah, the bull market is completely over. So you kind of have to come up with that opinion for yourself. I don't think that's happening. I think the lows are in for Bitcoin. I think 74k was the low. I said that already. But yeah, we could get a bit of a dip at some point, and I think those dips are good for buying. I think the trend has kind of reversed now, hopefully. Some other reasons I'm bullish on Bitcoin, and I do think once Bitcoin breaks all-time high, all the alts are already starting to go crazy. Although personally, I wouldn't be buying alts myself right here in massive size. I'm already very exposed to the markets, as I always am. I'm not really the type to be sidelined in cash, so I'm very happy my portfolio is looking nice, because it looked awful the last while. But yeah, I wouldn't really, I think it's too risky to be buying altcoins. I think it's too risky to be buying index funds and gold. I think Bitcoin is kind of the most obvious assets to be buying up until we break all-time highs, and then I think Bitcoin dominance might top around that point finally, and then altcoins look like, you know, a good buy with a lower risk at that point, because Bitcoin has shown we're back in a bull market, we're back on bull zone. Buying altcoins here, you know, just in case Bitcoin rolls over and, you know, bear market's back on, then altcoins go back to zero. So I would be a little bit cautious. It's too early to be doing victory laps on the bears at resistance right here. But in the medium term, that's just for short term. I think we're heading into a bit of resistance, but medium and long term, I'm very bullish. Some other reasons: there has been kind of a stealth QE going on in the US. So basically how Bitcoin, everyone knows Bitcoin follows liquidity, and everyone has always just looked at the US liquidity and said, oh, the US liquidity is going up, Bitcoin's going to go up, and that's always been correct so far. Or US liquidity is going down, Bitcoin's going to go down, and that's been correct. The reason being because everyone always, like, all the other governments followed US liquidity. If US raised their liquidity, they would have to follow suit, and vice versa. If they decrease liquidity, everyone would raise their rates. They would do quantitative tightening, etc., etc. So everyone just followed the US. So if you followed the US liquidity profile, that was like enough. You didn't need to track global liquidity. However, for the last couple of months, global liquidity has been increasing, or like the last month or so, and potentially for the next couple of months, global liquidity is increasing while US liquidity is decreasing. But global liquidity is, even though the US has the biggest liquidity for a singular country, global liquidity is still much larger in aggregate. And as we can see, the global liquidity has been making a higher high. And, you know, we can see Bitcoin has been tracking this almost perfectly. It's like the most crazy correlation you'll ever see. And why is US liquidity dropping? Just so you know, like we mentioned at the start, China is selling their bonds and they're converting those US dollars back into yuan. China is selling their US stocks, converting that back into yuan. just as an example, but that's probably happening kind of on a worldwide stage. So that shrinks US global liquidity unless the Fed comes in and starts printing in order to buy back those bonds, which they're kind of, I think the treasury market has started doing this because the bond market has just gotten so volatile that they've been forced to print a little bit in order to reduce that volatility. Arthur Hayes, I'll link the article about this in the description, probably too deep to get into this video, but to smooth out the volatility, because a lot of hedge funds are about to blow up with this bond volatility. So there actually is stealth QE going on in the US liquidity profile as well as the global liquidity. The global liquidity has increased because the trade deficit with America is going to start reducing. So China and other countries have to print money in order to buffer that trade deficit a little bit. Another thing that is bullish for Bitcoin, we've seen SoftBank, well, a company that's being backed by SoftBank, is setting up to be a new MicroStrategy. And we know how much MicroStrategy has been bullish for Bitcoin. They're just top blasting into Bitcoin, billions and billions. Every couple of weeks, just absolutely going berserk, buying crazy amounts of Bitcoin. We're getting another one of them that's led by SoftBank, that's led by Cantor Fitzgerald, which is, I think, owned by Scott Bessenter. One of the guys on the Trump team actually owns it, Cantor Fitzgerald, or was the CEO or something like that. So yeah, very bullish Bitcoin in the medium term. Don't know about the short term, but medium and long term, extremely bullish Bitcoin. Bull market's back. TLDR, stonks down, Bitcoin up. Let's fucking go. Thank you for watching. Hope you enjoyed. See ya.